What's happening, everybody? It has been entirely too long since we've done one of these. I've missed hanging out with people. I've missed having people jump in and chat with us. And so tonight we're going to have a really fun time. I've got an awesome guest. I don't want to waste time talking and bantering. I want to get her in here to find out what's been going on. So, Erica, welcome to the show. Everybody who, if you don't know, this is Erica Davis. She's with Guild Mortgage here in Myrtle Beach. Her mortgage team is amazing. They do my personal loans on all of my mortgages, and they're great to work with. I love the ability of communication we have, and I love the fact that if I have an issue with one of my mortgages, I can pick up the phone and call her office directly and get things resolved. I had one of those happen today, actually, and I picked up the phone and called Erica directly and said, "Hey, I need some help with this." And she said, "Give me a few minutes. Let me call servicing department." And we're getting the issue resolved just like that. I didn't have to give loan numbers and nothing. I just had to say help, and it was done. So, Erica, welcome. Welcome back. How have you been doing? Oh, man. Just like that. I think she froze. Uh-oh. Well, she'll come back. Hopefully she'll be back in a few minutes. In the meantime, if you are joining in tonight, I see some people jumping on the live stream already. Do me a favor, leave a comment. Tell me where you're watching from tonight. And as we get going, if you have questions, feel free to put them in the chat. We're going to answer a bunch of those. In the meantime, till Erica gets back here, I just want to take some time and tell everybody a little bit about what's been going on here in Myrtle Beach. It has been a crazy wild ride for the last several months. I've been so busy that I haven't had time to do many live streams. But now that the kids are back in school, oh, thank goodness kids are back in school. That gives me a little bit of time now free to do things. And we're going to try to get back to doing some live streams on Monday nights. Probably not every week, but I'm hoping maybe to get to every other week to do a live stream. And we're going to answer the questions you have. If you're thinking about moving to the area, you can answer your get your questions answered at this time. You can go over to the chat, drop it in there. We will do what we can. And like I said, if you're watching today, do me a favor, drop in the comments where you're watching from. And we would love to have a conversation with you. For me, the last few months have been pretty crazy and hectic with business. Also with family, it has been. I now have a high schooler. As scary as that sounds, I have a high schooler, a middle schooler, and one in elementary. So we get to experience a lot of schools throughout the week. My kids are in the Carolina Forest School District, and we absolutely love it. They love all the classes. My youngest, Miriam, she is so excited because she gets to finally have grades. She's going into third grade, and this is something she's wanted for a while is, "Daddy, I want grades. I want grades." And I kept saying, "Honey, you will get grades. Don't worry. They will come. And once they do, you may not want them anymore." So anyway, Erica will be back here in a few minutes. In the meantime, as you guys can see, I've upgraded the studio a little bit, the streaming equipment. Hopefully you enjoy it. As you can see behind me here, actually, let me do this. We're going to switch cameras here a minute. We're going to try to get real techie here. And let's do this. And you guys can see I've built... or not built, or added, if I can do it without turning it all upside down. There we go. It's kind of backwards. I've added a whole shelf behind with a lot of things, sharing things that I love, things that are near and dear to me. As you can see over there on the wall, up on the top, I've got some of my video gear and equipment that I use. I've got a live subscribe account, which if you're watching today and you haven't subscribed to the channel, do me a favor. Click that like button and subscribe. That really helps as well. You can see also over there on the shelf is my Philadelphia Eagles. I grew up outside Reading, Pennsylvania. Big Eagles fan growing up. And it's been a ton of fun being an Eagles fan. Yesterday was a great game. And also you saw over there on the shelf, Another thing that I enjoy doing is Mountain Dew and also Disney. I have taken several trips to Disney with the family over the last few years. One of the things I enjoy about living here in Myrtle Beach is that a trip over to Disney is fairly quick and easy. We can drive and be there in about 7.5 hours. So it's kind of great to be close by, quick and easy to get over there to do what we need with it. So yeah, that's what's been going on here. I want to give thanks to my friend. I'll use this finger right here. If you notice this little thing, this was a gift from my friend Pam. It is actually a mini refrigerator. It's the coolest little thing ever. It runs on a USB plug. And so we have it. I see people are starting to come in. Erica, I see you're back. Let me get you brought in here. Let's add you to the stream. And here she comes back, hopefully. Let's see. Maybe. Maybe not. Oh, maybe it froze again. I don't know. Well, in the meantime, while she's working through this, she'll get in here, I'm sure. Let's go over and check out some comments a while. We've got Lock and Shake Films. Hey, bro, Columbia here, but in Little Rock for Police Academy, but we'll be back in South Carolina in 2 weeks. Originally from Pamplico. Next 5, I may move to Longs or North Myrtle Beach. Nice. Well, listen, when you're ready to make the move to the North Myrtle Longs area, it is a very popular section of the beach. You know, a lot of people I talk to used to say Longs, South Carolina is so far away from the beach. The reality is that a lot of it has been developed now, and it's just on the west side of the waterway. Longs is kind of becoming the northern version of Carolina Forest, with a lot of great developments being built up there. And it's usually a little bit more affordable than some of the other parts inside city limits. But welcome to the show. We got Ram here tonight. Sup, brother? I'm Rob and checking in from the northern burbs of Chicago. Welcome from Chicago. Keep your snow up there. I did see the highlights of the football game that you had up there yesterday. That was pretty crazy with all of that rain. Luckily, it was rain instead of snow. But you can keep your snow up there. We don't miss that down here at all. Let's see who else is in here tonight. We got Doug. Doug's joining in from Maryland. What's happening, Doug? Hope you're doing well tonight. And we got Linda from Connecticut, who's here as well. Welcome, Linda, to the show. Hopefully you guys are all doing well. So hopefully, I see her starting to come back in. Let's try this again. We're going to add her to the stream. There she is. Hello, Erica.
Hi. I'm sorry, good old technology. You know, I'm on my phone now. Imagine that, and it's working better than my laptop.
Oh goodness. Oh goodness. Yeah, your signal's not too great. You're kind of lagging a little bit, but we'll work with it. We'll work with it for sure. Well, welcome in. As I was sharing a little while ago before you got disconnected, if you guys are looking for a mortgage and moving to the area, let me stop, slow down, speak and enunciate. My wife tells me I mumble, so we're going to not do that tonight. If you guys are moving to the area and you need help with a loan, reach out to Erica and her team at Guild. They're awesome to work with. I use Erica and her team for my own personal loans. They are phenomenal. They're great to work with. If you need help with anything after the fact, they're always here to help however they can. So, Erica, tell us what we were just chatting about is what has been going on. It's been a while since we've done one of these. It's been a couple months. And, you know, we've kind of had a really slow, quiet time of just sitting around, relaxing by the beach, doing nothing, right? I mean, we haven't had any business or anything going on, right?
No, not at all. Especially last year was so slow, right?
Yep, it's been super slow. But tell us what you've been up to the last few months.
Yeah, I mean, as you guys all know, interest rates, you know, they have more than doubled. And I know that that causes so much stress, you know, and it even, you know, makes you contemplate whether or not home buying is, you know, if this is the right time. So interest rates are now in the sixes. Yes, they are. And I think, quite frankly, we all got spoiled, right? The past, I'd say 2 years with them being, you know, as low as 3% or even lower than that. And it has been on a steady rise, and a lot has to do with inflation.
Yep. Well, you jumped right into the subject tonight. I just
I
wanted to know
did.
what you been up to. What's been going on? I mean, what exciting things did? Let's back up a second. Let's talk. What was something exciting you did this summer?
This summer, I am a beach girl through and through. I actually even went this morning. Any downtime I have, I am at the beach. So fun times to me are at, just being able to enjoy that ocean breeze, get to see the ocean, enjoy that summertime. It doesn't get much better than that. It really doesn't.
I hear you. Yeah. It's funny. I am not much of a beach person. I have to be honest.
I know.
I'm strange in that I don't like sand between my toes.
And that's the best. It's the decompression. I mean, I can feel it now.
Like when I'm at the beach sitting there, I have
Mhm.
fun, digging my feet in the sand and all that.
Mhm.
But then it's like I want them showered and cleaned and I want my socks back on. I don't want to have to get that feeling of having to walk up the boardwalk after the fact and then
Yep.
rinse your feet and it's kind of wet, kind of not to get into the car with a little bit of sand still there. Now, see, that just to me, that's like torment. So I can't do that. But it is what it is.
I think we need a poll on that, right? It's like there's nothing better to me than you get home and you can still smell the beach on you. I know it's kind of gross, but you can, especially if you get some sun out there, you can feel it, you can smell it, and that's complete opposite for you.
Mm, I hear you. I hear you. Well, we have a couple people that are joining in tonight with us, and guys, as you're coming into the chat, if you have questions or have anything you want to get answered, drop them in the comment section and we'll definitely answer those as well. But we've got some people joining us tonight. Erica from Connecticut, from
Ah,
Maryland. We've got people from Chicago, all the people in those cold states right now.
yeah.
I think they're preparing for their winter and saying, get me out of here.
I bet they like the beach.
I bet they do. I bet they do. Well, let's see who else here we got. Linda says she's interested in moving to Conway in a few years. Well, Linda, as
Oh,
you get closer to that, reach out to us.
mhm.
One of the things that's really important, especially when you're looking at some of the areas around Conway, is making sure that we pick areas that are not flooded. When we had Hurricane Florence, flooding that we had did not happen over at the beach. It was
That's true.
in
Mhm.
inland in Conway, in Sockasty, in parts up on the northern end of the beach. So make sure when you're ready to make that move that we really dive into that some. A residential property disclosure is going to help immensely. As well as talking to an insurance agent ahead of time. I've had Terry Branson with We Insure on before, and she'll be back on soon, I'm sure, because we want to make sure we don't end up in those flood zones. And then next we've got Doug. Doug says Guild Mortgage has my mortgage. You guys are
Yeah.
awesome to work with. What is the price range of new homes along the River Oaks old golf course? Ooh, Doug's a good question.
That is
So,
good.
so Doug, there's different sections that are being built there. It depends on whether which development you're talking about. You have new homes that are being built in Berkshire Forest, which is by Pulte Homes, and they're going to start about 420-ish range and go up into the mid sixes. You have a new development that's being built by D.R. Horton, which is a little bit more affordable. I want to say those are probably in the mid threes to fours. But right across the street from both of those, you have then some custom home communities. There's Carolina Waterway Plantation, Waterway Palms, the Bluffs, and the Battery on the Waterway. 4 different communities all right there, and they're all gated and private and separate ones. And those custom homes are probably starting now in the high fives, low sixes, and up into, if you're on the water, well over $1 million. I sold one back in 2020, or maybe it was 2021. It was the Castle, and that was a second row to the waterway, and it sold for over $1 million on that one. Let's see here. We got Dustin who says, my grandma's house just sold in Pawleys Island, South Carolina. I know the asking price for her house was $439,700. I don't know how much it sold for. I mean, the estimate was 439.7. I'm more of a mountain person, and he's from Virginia. It's okay. You can be a mountain person. My wife wants to take a trip to the mountains, and I'm okay doing that. I just, when I go on vacation, I don't know about you, Erica, but when I go on vacation, I want to not have to work. I want to just have, I want to be waited on and not have to do anything
Not
on those.
have to plan and analyze and
Yeah, my wife's like, "Hey, let's get an Airbnb up in the mountains and we'll
Mhm.
take food with us and cook lunch and breakfast and dinner and we can take bedding for the beds and on." I'm just like, No, thank you.
Mhm.
Can I go to a place that's 4-star and then just have the meals all made and I don't have to think about it. I don't have to do anything." So
That's right.
we're working on that. But anyway, let's jump into this topic a little bit. And you started to talk briefly about it a little while ago. But I'm going to let's see here if we can get this to and hold on a minute. I need to add a screen. Let's share the screen here. And we're gonna do that. And we're gonna take this and move it over here. And you mentioned about mortgage rates a little while
Mhm.
ago. And we have seen them jump just a little bit. I think the last time we were doing this, we were looking at rates down in the twos and threes, and we were loving it and excited about these lower rates and everything. And the world was hunky dory and everything was amazing. And then we had craziness come in with inflation. I think gas was probably about $2, maybe $2.40 or so at that time too. And inflation came along and interest rates went up. And this is just random from Google's rates as of today. But
Mhm.
Erica, what the heck happened? Why did these rates go from the mid threes to in the sixes?
It is wild, isn't it? How quickly things change. I mean, we went from, and it's still rapidly increasing, home values here, but basically it was free money, right? We were in the twos and threes, and really inflation, and of course, things in Russia and a whole bunch of other events happened, and it has caused interest rates to steadily increase. And the highest they got it was around mid-June, and that was because that was the highest report that we've seen from inflation. Inflation was at its highest, so we saw the highest peak in interest rates around then. And from there, it's steadily increased, not as rapidly as it has been, but they are steadily on the rise.
Yeah, and when this happened, of course, the media, we'll just use
Hmm.
that nicely, came along and was started to say interest rates are rising, housing bubble is imminent. We're about to see the market crash. Everything's about to stop and die, and
Hmm.
the world's crashing. Everything's burning up. Quick, run, run, run for your lives. Quick, run. What did you see? I mean, have you seen a slowdown? I know you've seen a slowdown, obviously, in the refinance market,
Sure.
because people who have mortgages in the threes and fours aren't going to refinance their house up into the sixes now.
Hmm.
So I'm guessing that market has slowed down some. What about new homes and new production? Are you still seeing a good amount of that?
Things have slowed down, but quite frankly, it's not necessarily because of these rates increasing. We are in a second home investment, property area here in Myrtle Beach. So I do feel like those clients specifically, it's not their primary residence, that has slowed down some.
Sure.
But just overall with interest rates, yes, we don't really do refinances anymore because if somebody is simply just looking to refinance to get a lower monthly payment, it doesn't make sense. However, with inflation, people are having to spend more money, right? You talked about gas prices. My grocery bill is absolutely insane. I'm sure you can relate because you've got children as well.
You know, I went to Bojangles the other day.
Mm-hmm.
and I just got a chicken tender box. It wasn't anything elaborate. It wasn't a meal for the whole family. It was just for me.
Right.
One person, 4 tenders, French fries, and a drink. And it was like $10. I'm like,
I
this used
know.
to be $4.99 and it's $10
Mhm.
now. That's crazy. For those of you from the Northeast and from the North, you may not know what Bojangles is. It's a southern chicken place down here where they serve fried chicken, French
Mhm.
fries, and good old sweet tea. And yeah, inflation's hit the Bojangles for sure. But anyway, continue.
And that's worth the $10 if you get my favorite is the spicy chicken biscuit. Oh my gosh, amazing.
Mm, mhm.
But yes, so everybody is experiencing these additional monthly expenses, and of course, you're having to use your credit card more. And
Mm.
that's 18 to 20% very easily. So, when you're on a fixed income, you're retired or you're W-2, people are in debt further than they were. And so, yes, sometimes a cash out refinance does makes, good sense to even refi at a higher interest rate and pay off some of those higher interest rate debts. So we are seeing that. But then as far as the purchase market, a lot of people are paying cash because there's multiple offers on properties, or again, interest rates have risen, and if they have the ability to pay cash, that's an option. They can always refinance and pay themselves back in the future. So those are a couple things that we are seeing. um, the biggest one is we'll get people qualified, and then oftentimes they'll get afraid, hey, maybe this isn't the right time, maybe I should wait, type thing. Are you seeing that as well, Jeremy?
Yeah, well, it's funny. I was just looking at my production board, which sits over here to the right. Well, over here to the right of me,
Uh-huh.
and to see what I've got pending right now. And of them, 4 of the 8 are cash buyers still.
Yeah.
Are cash buyers now, I should say.
Hmm.
People still have cash. The
Yes.
thing that I have seen is people selling houses in the Northeast and other parts of the country
Hmm.
still have tremendous equity
Yeah.
from their house that they bought 4, 5, 6 years ago. I
Hmm.
look at the house that I currently am in, and we bought that house in 2019. And I want to say today, I'm probably 170 to 200,000 of equity in that house.
That's
And I
amazing.
did not make giant payments on the
Hmm.
mortgage at all.
You
I've
don't need to.
had
Your interest rate is way too low.
Yeah, no, my interest rate's under 3%, so I'm definitely
Yeah.
not paying that down. I use that money for other things. But
Right.
it's amazing to see, how much equity we've all built up in our houses
Hmm.
during that time. One of the other things that's really interesting, and let me pull back up here the screen share. I wanted to bring this up. People talk about, oh, we've had all of these horrible things with the month's inventory and days on the market, month's supply. You've heard people say month's inventory supply has doubled, and
Hmm.
we're heading towards this crash. We're heading towards the end of the world. Well, here's our numbers in our MLS. And if we look at it right here, the month supply, beginning of the pandemic, 5.2 months. The first month where everybody was shutting down, everybody was staying home, nobody could go anywhere, nobody knew what to do, nobody even knew what the word
Hmm.
pandemic meant. We went up to 5.4 months. That number is basically a little bit higher than what it was in 2005, 2006 on month supply. And then you'll see it just started dropping like a rock.
Wow.
And, right about in here, around this 4-month mark, that's what we had back in 2005, 2006, when we had a true housing crash or a
Hmm.
bubble that burst. But this number just kept going down and down, down, down. And we got to this 1.3 in 2021. And then you can see the spring market came along with the summer market, and we got a little bit more houses out there, and the builders were able to get a little bit of supply stuff in. to bring up some inventory till the fall. And then the fall market began. And fall market for me has always been very strong.
Mm-hmm.
I do more business in the fall market than the summer market consistently every year. I don't know
Mm-hmm.
about you. Do you find yourself normally busier in the fall or the summer?
Absolutely, the fall. I'm with you. October is typically my highest in production. And believe it or not, so December is the same way because I feel like people, it's the end of the year, they want to make that decision.
Yep.
So oftentimes December is busy.
Yep. And so you'll see then, here was October, and then we went way, way down. And this is when we had all the supply. You heard supply
Mhm.
chain, supply chain, supply chain. And so inventory got used all up down to this 1.1 months mark. March 22, we were at 1.1 months.
Mhm.
March 2021, we were at 1.9 months. And you'll see then it started to go up, and we're up to now 2.3 months. The market's over. We're done. We might as
I
well
was
just
trying
quit.
not to laugh, right?
We better just go get our Uber
Mhm.
licenses and go start Ubering and Lyfting, Erica, because we're not going to sell any more houses.
Right.
Doubled. No, the market hasn't. Yes, the inventory of homes has doubled, but there
Mhm.
is still a huge demand. People are still buying. Things are still selling. Things are closing each and every day here. The other thing that I've heard a lot of is there's price reductions, price reductions, price reductions. We didn't see those before. Yeah, the market has shifted a little bit. The people who said, well, listen, I want to sell my house for 450 when I told them 375, and they turned around and said, see, I sold it for 450. You were wrong. Those people, that market is over.
Mhm.
People now are not going to overpay because they're starting to have options. When we were down in this market where we were in this under 2 months mark, people were selling their houses and getting top dollar for it. They needed a place to go. They didn't have the option of just waiting. They couldn't pay rent for 6 months until something showed up because it was ridiculously expensive. So they continued to buy and pay sometimes more than they needed to. Why? Because they needed a house. But even with all of this happening, we're only at 2.2 months, and it's not that bad. What this means is we have a little bit more options for buyers right now. And honestly, I would say it's a pretty darn good market right now for buyers who are thinking about making the move to make the move. What would you say, Erica?
Absolutely, I do. And I think this is spot on. Plus, you can visually see everything. Oftentimes, like you said, people think that this market is going to crash. Well, if you look at every single, recession that we had, it only went down two times. And I think there were 6 or 8 recessions that we had. This is inventory is still a huge need, therefore we're not going to crash. I can't remember, the specific number, but it's over 200,000 homes that we're short. It's a
Mhm.
true demand that people need homes. So we're just really not in that situation, thankfully. Yeah, and I think it's pretty nice. There's only 2 months of inventory. Clearly, homes are still appreciating, but not so rapidly. And I think that helps. Again, it just helps level everything out. And like you said, sellers now have a place to go. So more people, if they have a house to go to, more people will want to put their house on the market too. More options. You hit the nail on the head.
Yeah. And guys, as we're talking, if you have questions about any of this or want to know, where are good areas, what are rates doing, what do we see them
Hmm.
doing, whatever, just drop it in the comment section, and we'll definitely answer them as well as we're going through. But Erica, this is kind of my theory of what I
Hmm.
think, and I'm going to actually change the view up here a minute so that
Okay.
it's a little bit bigger. And actually, I'm going to just take you off the screen so that I'm full screen a second. So here's kind of my thoughts on what I think's going to happen and what has happened with this market. And I've shared this with many clients that I've talked to over the last few weeks. And I'll tell you guys why I feel this way and even give you proof why I believe in what I'm saying. I'm not just a salesman. Yeah, as we're going through this. So here's what I think has happened. We've seen the market go like this and it's shot way up, right? We've now kind of hit this part where it's kind of leveled a little bit. And what we're going to see is we're going to kind of just see this wave thing that's going to go. And as it's going to continue to go up. But we're going to see little slight dips, slight surges, slight dips, slight surges over the next year, year and a half in this market. I think you're going to continue to see houses come on the market. If a home is priced properly, it is selling quickly. Last two listings that I've put on the market have not lasted a week and have sold for within 98% of the list price. I mean, it's no longer you're paying 105 to 110%. You're getting a little bit off, but things are still selling fairly quickly. Now, when you're starting to see things that had reduced on it, those reduced were ones that I said to the seller, hey, 375 is where we should list. And they said, let's do 450. And the agent says, okay, well, we'll list it at 450 and see what happens. And it sat for a month, month and a half, nothing. Because people said, why do I want to pay 450 for something that's worth 375 when there's true houses here for 400, 450 that I can get that are much bigger, much nicer for that. So where you're seeing those reductions come in is the people who shot for the moon and the stars, they didn't get it. And now, unfortunately, they're having to play the reduction game, which is why if you're thinking about selling a house, it is so super important when you put your home on the market that you list it accurately from the beginning. Even when the market was crazy, I would tell people all the time, list it for fair market now. If there's a demand for your home, it will create it. I had a property that we listed it and I had 9 offers on it. Another one had 11 offers on it because we priced it properly. And yes, it sold for 15, 20, 30,000 more than the asking price because people wanted the property because there wasn't anything out there. But if I had gone and put it at that higher price, that didn't mean they would get more. What I did do is cause demand for it and interest and sold it for a very good price for my clients. So, I think we're going to see kind of that just little wave thing and just kind of going back a little bit more to what we used to. And, if we go and look here at the average sales price on this graph, and let's switch this over here a minute, you can see it's just crazy when you look at how prices have just gone through the roof. I remember when prices of houses were back in here in the 200, and this is, back when I bought my house back in January 2019. I don't even know if the graph will go back that far. It does. So when I bought my house, the average price was $190,000.
Right.
Now we're at 320, basically 317.
That's what I was going to say. And with, a lot of my buyers, I feel like that is where we do need more inventory. That I'd say 3 to 350 price range. I would assume that's where the biggest shortage is.
Yeah, for sure. For sure. Well, let's take a look over here. I got a couple questions that have jumped in here. And I think one of these, Erica, is going to be right up your alley. So question that came in was, I know you recommend dealing with a local lender. However, my financial advisor, Morgan Stanley, suggested keeping it in family and could get me approved fast. Why would I go with a stranger? I'm going to let you give the lender answer, and then I will give the realtor answer afterwards.
Sure.
Oops. Let's get you back on the screen. There we go.
Can you see me? Okay.
Yep.
Yeah, every situation is different. A financial advisor is a little bit different than going, to a lender who's online or an 800 number. Obviously, online 800 number, you're dealing with literally an order taker. Sometimes they're not even licensed. So if it doesn't fit in the square box, the answer's no, and the pricing is not as competitive. You don't have, as Jeremy said, like a lifeline. So if something happens during the process or after closing, you can't pick up the phone and call that person. We service the majority of our loans. It makes a huge difference. So you don't have to sit on for hours on an 800 number trying to get a simple question answered, like, hey, I need to update my insurance. How do I get that updated? Or I want to set up auto draft. You name it. You can certainly contact me. Now, financial advisors are going to have a lot of your information. So in that case, I would get two different opinions because again, they've got your information, but lending is not their specialty. I am certainly not a financial advisor. Mine is my brother. He does an amazing job, and I don't speak his language. He doesn't speak mine. So that's something to consider as well. I would recommend getting a loan consultation so you can go through and see what options work best for you. That's really what I do. Again, I'm a lender. That's all I deal with. And he's your financial advisor. So definitely get two opinions there.
Yeah, and I would add on to that this, and I share this story often. Still in this market, we're seeing multiple offers show up on
Hmm.
a property, especially if you're trying to get something that is a hot property or a popular property as it hits the market. And here's what you need to realize. Like you said, first off, Erica, and perfect example. I called Erica today. I needed to get the insurance updated on my current property.
Hmm.
And for some reason, the payment hasn't reached yet to the insurance company. I could have, if I was with whoever else for a mortgage, I would have had to call an 800 number, look up my loan number, call in, get somebody on the phone who would probably transfer me to another department, who would transfer me to another department to transfer me to another, to then tell my story, hopefully not get disconnected on the phone and get everything done. Instead, I made a call to Erica's office. I said, hey, got a note from my insurance company that the bill hasn't, they sent the invoice in August and hasn't been paid. Can you check on it? And literally within 3 minutes, Erica responded, I've already talked to the servicing department. We're checking it out.
Hmm.
I'll let you know as soon as I hear something. And it was done. So that's number one, the service side of it. I'll pay a little bit more. I'll do a little bit more work if I have to get a loan done because I have that service for it. But the other side to it, which people don't realize this, is if we're doing a deal and if I'm the listing agent and I'm selling your home right now and I come to you and say, hey, we have two loans on this property or
Hmm.
two offers on this property, and the payments are the same, the earnest money is the same, the due diligence is the same, every part of the offer is exactly the same except for one part: who's the lender on the deal. And one of them's with a lender either not from in town or from one of the lenders in town that is not known for getting things done on time, or one that just gives pre-qualifications without actually verifying things before saying, yeah, they can buy it, and the deals fall apart. Any of those items. And then the other offer has Erica and her team at Guild, which I know they do their work. I know how they do things. Erica and her team have great relationships with many of the agents here locally. If I call somebody and say, hey, here's my offer, and yeah, the person's pre-approved with Erica at Guild, they go, okay, awesome. And that's the end of the conversation. Or they may sometimes pick up the phone and call Erica and just say, hey,
Yeah.
I saw you did this loan for Mr. Smith with Jeremy Blanton.
Hmm.
Are we good? And Erica says, I don't see any issues with it, and that's done. If it comes down to two things, and one is a lender who doesn't have the greatest track record, and one's one that does, the one that does is going to win that offer. And I want to make sure my clients have every single advantage possible. That doesn't mean that you can't use them. If you want to use someone else, we'll gladly do it.
Sure.
Sometimes, when you're buying new construction, like right now, I have several deals that are new construction, and the one of them is giving the person like $12,000 in closing credits. It's crazy what they're doing. Erica and her team, they can try to compete, but when it starts to get into that range and that realm, it's a little difficult. And I just tell my people, hey, it's okay. Use them. Just know once your loan is done, it's more than likely going to be serviced and sold off to someone else before the ink's even dried on the paper. And you're going to be making your payments to a different company. But you've at least saved that $12,000. So it's okay to use others, but my personal preference is using someone local.
I appreciate that, Jeremy. And that's another good point too. Being local, we're truly local. We have processing and underwriting, closing, all of that's right here. And I'm the manager here at Guild. So if we say you're approved, and we're going to make sure that the closing happens on time. And typically we're clear to close way in advance of your closing date. We'll update you throughout the process. And even with pre-approval, yes, I know it's like you've got to get pre-qualified very quickly, and we will give you a price range and let you know, hey, you look great in this range. We do not like to stay pre-qualified very long at all. We'll go ahead, we'll get your documentation, send you through underwriting. So there are no issues, no more stress points. When you make that offer, you'll literally just need an appraisal and title work. And again, as Jeremy said, the listing agent knows when they get that offer, we've done our due diligence, you've done your due diligence. So it's literally the next best thing to cash. And I certainly can help, once you make that offer, to reach out to the listing agent and with Jeremy and let them know how solid of a buyer you are.
Yeah, it just makes the whole process and puts you in a better light all around. But that is a good question. Thank you for asking that. Let's see what else we've got here. Carlos says, hello, Jeremy. I love your videos. I really enjoy watching them. Hello, Erica. I bought a second home at Magnolia North 4 months ago. I didn't want to wait for interest rates to go down from New York. Welcome, Carlos. I don't blame you for waiting for the rates to go down. We're going to talk about that a little bit in a few minutes, I promise. And then hello from Florida, looking to make the move to beach in a few years. When you're ready, give me a call. Call Erica for the loan, and we'll help you make the move simple and easy for sure. I mentioned a few minutes ago how I think we're going to kind of see this wave with things slowly going up. I mentioned that I was going to share with everyone, kind of how I can guarantee that I feel this and why I feel this way so much. Guys, I'm buying another house right now. Would I be doing that if I thought the market was about to crash? If I thought prices were about to drop and tank out? If I, thought interest rates were going to this was just a 1 week thing and it's going to go back? No, it's not. And, the other thing to consider with rates, even with them in the 5s and 6s right now, we're still better than we were back in 2006 and 7.
Yes, we are.
2006, 7. I remember when I bought my first house in 2006, I had bought a townhouse over in the farm, and my interest rate was 7.69%. And I was so excited to have that. We've been spoiled.
Yes,
really. We've been spoiled with these rates in under 4 for so long, that people don't realize it. But the thing to kind of consider at the same time is the interest rate on rent. What's the interest rate on rent, Erica?
That is always going to go up, and it's unknown, guys. And you're building wealth for, the homeowner, not for yourself.
Well, and the interest rate on renting is 100%.
Yeah, it is. You're exactly right. 100%. Yes.
Yeah, 100%. You're not building anything. So I really feel we're going to see strength coming, with this, and the market's not going to bubble. Erica, one other question. I didn't kind of prep you on this one, but I'll ask you anyway.
Yeah.
I've heard a lot of people talking about rumor mill that the foreclosure market's coming again. We're about to see this massive influx of foreclosures now that the moratoriums are being lifted
Mhm.
and the forbearances are done and all of this stuff. What have you seen or heard on that front? Are we going to see this influx of foreclosures coming over the next few months?
No, we're not, guys. And I haven't seen foreclosures around Myrtle Beach. Gosh, I can't tell you the last time. And I just even searched with Gil because I was curious, and it's extremely, extremely low. And the reason is we all learned our lessons during the last housing bubble back in, 2006. Back in 2006, it literally was free money. We did not verify if you were employed. We did not verify your income. Basically, you signed 5 sheets of paper and you could get approved. You could get approved to not only one home at a time, up to 10. And that's why we had a housing bubble. That's why we had all the foreclosures. So, yes, we verify your income. Yes, we look at your credit. And sometimes I know it can be a little annoying, but you just have to keep in mind it's for your protection so that you can steadily grow the equity in your home. And we know that you can afford it. You don't have to be stressed out about that as well, because we're going to reaffirm, by checking your income, by looking at your debts, all of that, that yes, you can afford it. And therefore, the foreclosure rates are never going to be what they were.
Yeah, for sure. And I'm trying to find it right now. I remember at our Remax convention this past year where we discussed the foreclosure market and all
Yeah.
and equity. The other part is so many people have equity in their house right now,
Mhm.
massive, huge amounts of equity.
Yeah.
I think it was like 98%, if I remember correctly, was the stat. 95 or 98% of all consumers in the United States right now have a positive equity of some sort
Yep.
in their home. If people have positive equity, we're not going to end up in a foreclosure market where they're upside down and can't afford the house.
Yeah. There's
Just
options.
it's just not going to happen. Not to mention
Mhm.
the average credit score right now. I mean, what do you have? I'm trying to remember the number. I want to say it was like six something, seven was like right around 730 maybe, or something was
That's
like the
mhm.
the average credit score that people have right now. So with people having good credit scores and equity, I don't see the foreclosure market coming anywhere near that as well.
No,
Um,
you've got your checks and balances. We have to make sure you can be approved for your protection. And then also, again, we're not in that space where we have to worry about being upside down on the property and you can't sell and you can't get out.
for sure, for sure. Guys, if you have questions about anything related to mortgages, interest rates, investment
Mhm.
mortgages, all any of that kind of stuff, put that stuff in the comments section and we'll definitely answer them. And while they're doing that, Erica,
Mhm.
let's go back here a minute and just look at this fun article that I found, and I want to get your thoughts on this one. So give me just a second here while I
Sure.
pull this up. Let's go to here. So I found this article the other day. Oops, let's make it a little bigger so you guys can see it.
Yeah, that's much better.
And the title says mortgage rates will fall to 4.5% in 2023. That's the estimate from Fannie Mae. Here's
Mhm.
what that means for home buyers. I know when you mentioned this to me the other week that you thought interest rates were going to go down, I was just kind of like, yeah, okay, whatever. You're just trying to get the loan, whatever type of thing with it. But then I saw this article show up here on CNBC.
Mhm.
What are your thoughts on it? Let's break this down a little bit. I'm going to let you take the floor and kind of
Sure.
share.
I will try not to bore you guys to death, but a lot goes into that. And a couple, basically things to think about right now. Government is doing a great job of doing what they need to do, is getting that inflation down, and also help the people that, because there's such a shortage of inventory, it's helping by rising interest rates are helping the people that truly need a home, first time home buyers, primary residents, be able to, be the first ones to have that opportunity. But what we're seeing is so many analytics and other, like Bank of America, bigger banks, everyone foresees that interest rates are going to go down next year. So, because of that, what we're seeing right now is tight compression. And what I mean by that is it's been so long since we've seen a cost for an interest rate. Typically, you can get what we call par pricing, and I'm just going to use numbers here. But, back in January, you could get 3% for zero cost, meaning that you just had your typical closing cost, your appraisal, the attorney's fees, our underwriting charges, that sort of thing. And it was, roughly over $3,000. Well, now, because everyone, is thinking again that these interest rates are going to go down, it is just hard because basically the buyers of these loans, they're not willing to pay because they know that it's going to be basically refinanced, or that loan is going to be paid off super quickly. So with these rising interest rates, there's also cost involved because, again, the secondary market knows that the prepayment, it's going to be a quick loan, basically, that they're going to be prepaid probably within the next year, meaning these people are going to refinance. So you're starting to see points associated with loans due to that. And typically, a point is equal to 1 point is equal to 1% of the loan amount. So you've got closing costs plus you have cost associated with the loan, because everything is projected for these rates to go down. And I know that can get a little confusing there. So I'm going to pause, see if there's any questions, and also can give you some tips around that to avoid additional cost.
No, keep going. You're you're dropping truth bombs. Keep them coming.
Yeah, I know. It's not really what you want to hear. It is what you want to hear because these rates are going to go down. And I like to tell my clients, hey, you're not marrying this interest rate, right? You're just dating. And it makes so much sense. If you find a property that you love and you can afford it, go ahead, purchase it. And that is the highest your payment is going to be. It's the highest rate it's going to be versus renting. And you don't know, you're not in control. You can always refinance if these rates go down. But again, you're a renter. You're not doing anything for yourself. You're not building wealth, and you're not in control of keeping that payment steady.
Yo, what was the phrase that was going around? Marry the house, date the rate, I think it was, or something like that.
That's right. Yes.
Yeah, and honestly, guys, that's what I'm doing. I'm marrying the house, dating the rate for a little while, and hopefully down the road here before too long, it will go down some. And I'll refinance it because we're not planning to sell that house anytime soon. And we plan to keep it as a future for a long time. With 3 kids, 1 in high school, like I mentioned, we need a little more space, and that's what this house is going to afford for us. We did have a question that came in here, Erica, and this was kind of a good one, from GTI123. What's the best strategy for buying another primary residence before selling your current home? Hopefully the proceeds from selling our current home will cover the cost of the new home.
It's a really good question. I'm happy to jump in there. So that's a great question. What I highly recommend, we offer what's called basically it's called a recast. So when you purchase the new property, you can put as little, if it's a primary residence, you can put as little as 3% down. So you can go ahead, secure that property, and not have to worry about pricing increasing. Go ahead, secure that property, and then once your home sells, depending on how much equity you have, you can apply those proceeds to the loan, and it's like a free refinance. We will re-amortize that loan. You'll have a lower monthly payment. And there, if you go with Guild, there's no cost associated to do that, or you can pay it off. But the recast gives you a lot of flexibility if you want to save some of those proceeds, put them in, the financial market, or you can buy another investment property. It just gives you options and control.
Yeah. And we talked about this, you and I personally, because of,
Hmm.
me taking on this new home and additional expenses and all. And,
Yeah.
one of the things that I think is important to share too is you can do a recast. Well, how often can you do a recast? Let's start with some of the basics of it.
Yeah, is a recast, the minimum is $10,000, and you can do that once a year. So if you want to set money aside, and then every December you can apply those funds, you certainly can do that. And again, it's absolutely no cost. So it's a no-brainer, and it gives you flexibility.
Yeah, for sure. And so I'm just thinking out loud here.
Mhm.
If I'm paying my mortgage each month, and each month I'm planning to put an extra $700, $800 down
Mhm.
on it to help pay down the principal, I may be better to put that money aside into a savings account until I
Yep.
have that 10,000 bucks and pay it once, because
Mhm.
I'm going to not only knock down the principal, but I'm also going to recalculate my monthly payment at the same time. That if I do have those leaner months where we may not have as much money, the monthly payment is less than what it is currently.
Absolutely. I know. It really depends on what your financial goals are. Anybody that's commission or has variable income, I think that is the best way to go. Put the money aside. You might not make a ton of interest, but still you'll be making interest on that money. And then you don't even have to call the 1-800 number. Call me. I can walk you through that process, get that all handled for you. And then every year you can enjoy that lower down payment and chip away at the interest.
Yeah, and for those of you that are selling that house, like she said, 3% down for a
Yeah.
primary, buy it, sell your
Hmm.
house up in the north. Get that $200,000, that you had in there, make a one-time recast and take your payment on that $400,000 mortgage and cut it in half.
Yep.
Basically 3 months after you're in the house.
Hmm.
Excuse me. So
Oh,
that's one way that you can definitely get the house down here, and especially
hmm.
back this last year when inventory's been really hard to get. I've
Hmm.
shared that with a lot of people, and I know several that have done that and purchased here that said, "Well, we don't have enough to put and buy the house cash. We
Yeah.
recast."
Hmm. A lot of people do that. And we offer bridge loans as well. However, this is just such a better option if we can do it this way, in my opinion. Again, it's less paperwork, you're in control, and you can put that monthly payment down. So, again, a loan consultation is vital because everybody's situations are different. This is a huge purchase. It'll be the biggest purchase you ever make in your life. So it's very important to go with somebody that this is their specialty, local lender, and walk through what your ultimate goals are. And a recast is a great one for people, that are maybe not ready for retirement or to move down here immediately, or as Jeremy said, just waiting on selling their current home.
For sure. We got another good question here from
Hmm.
GTI asking, are you seeing inventory levels moving up in the south part of Myrtle, i.e. Pawleys, Litchfield, Myrtle's Inlet? Let's head back over here. Take a
Yeah.
question off the screen so you can see it. So not only can we do it for the whole area, but we can also break it down and do for certain cities and areas. And so you see this orange line right here? This is current inventory here in Polly's. It's actually dipped down some over this last month from the actual MLS.
Mm.
So there's actually less properties right now in Polly's on the market. So inventory there going up? Not really. Not really at all. I know, Erica, you live up in the Myrtle Beach area, right?
I do. This is home for me.
Yeah. So I mean, you can see here's Polly's Island. We can also look at. We want to look at Murrells Inlet. Murrells Inlet's come up a little bit. They're basically at. Oh, it didn't bring it over here. I don't think, did it? Let's try this again. There it comes. Okay. So there you can see Murrells Inlet's at 1.9 months. So it's below inventory levels of the average MLS for the entire MLS right now. So, like I said, guys, market the inventory. Yes, we have a little more available, but we don't have that much, really and truly. We really don't. It's people think that I'm a salesperson because I sit here and say, that I don't see things slowing down, and just because I'm trying to get sales still, but the numbers don't lie. Yes, we have a little bit more, but inventory, but still, this is not a lot. Anything less than a 6 months inventory is considered a seller's market. So, guys, if you have other questions, put them in the chat while we're talking. And Erica, I saw you post something the other day that I wanted you to talk about because it kind of perked my ears up and got my interest a little bit. But I saw something pop up with regards to conforming loan limits.
Yes.
First off, before you get into sharing what it is, you got to first tell me what the heck is a conforming loan limit. And
Sure.
I know it went up and everybody was excited and all my lender friends were, woo, oh, it's the most amazing thing in the world.
Yeah.
It's so great. Break it down into terms that my viewers, because my guess is a lot of people on here aren't familiar with the term conforming loan limits and all that good stuff. Put it in terms we can understand.
Good old lender lingo. Well, the long and the short of it, and actually, this is the perfect time to talk about it, Jeremy, because we're talking about lack of inventory, home values. Are they going to continue to increase? All that. Well, conforming loan limits, guys, that's based on the average home price across the United States. So, when conforming loan limits continue to increase, what that means is the values continue to increase. So that's another another reason, or I guess security to know that the values are coming up. But conforming loan limit, again, based on the average sales price, once you get above that limit, it's called a jumbo product, jumbo pricing. And what that is because it's a higher loan amount, obviously we're going to have to do a little bit more due diligence because it's a riskier product. It's a bigger loan. So there's additional layers and restrictions on it. The credit score requirements are going to be higher. The down payment requirements are going to be higher. You're going to need reserves. And you're certainly not going to get as low as 3% down on a jumbo product. It's just not going to happen. So there are fewer available products there. With conforming, it just gives you, again, more flexibility. With conventional financing, you can get a home with as little as a 620 credit score. For government products, we go even lower than that. Debt to income ratio is more flexible. So because we have that increase, it allows people, again, a better, I guess, better options or a better chance of being able to achieve home ownership, especially these first time home buyers, because dependent upon where you're buying, that average home price, it might be closer to 700,000, believe it or not. We're lucky here in South Carolina that's, it's in the 3 to 350 range. But conforming loan limits, a ton more options. And what this is saying, two things with conforming limits increasing, values are going up, and now more people have the opportunity to purchase.
Yeah. I get the service, one of the services that you offer, which is pretty awesome. It's called HomeBot. And it
Mm-hmm.
basically, now obviously I work in the industry, so I kind of have an inside
Yes.
track to figuring out
Yeah.
house values. But it's interesting to watch it. And I open it every month when it comes
Mm-hmm.
to, it's like, oh, let's see what it's happened with the house now. And I
Right.
look at it and read it. But and if you guys are interested, Erica, I'm sure you wouldn't mind putting people in there as well with that. They could reach out to you
Yeah,
if they wanted to get on the HomeBot.
absolutely, guys.
It's a cool thing and kind of keeps an active track. Or if you're thinking about selling a house, reach out to
Mm-hmm.
me and I can also give you market valuations as well. We had another question that came in here from Jody just a couple minutes ago. He wanted to know, they wanted to know, how are you supposed to get that 3% down when you have two houses already? You have to pay for, wouldn't that bring your debt to income down?
Yeah, Jody, it depends. Again, everybody is different. They have different income, credit, and debts. So, pardon me, every situation is different. We are going to look at your debt to income ratio. So, it might not be, an option for you if you own two other homes and the income is limited, that sort of thing. We still have to count your current residence if you're going to keep it. You're not going to sell it prior to the closing on the new property. So it's all something we have to consider. Now, excuse me, if you're buying an investment property, that's a lot different than a primary. And we would use projected rental income because we know that you're going to rent that property out to offset the mortgage debt. So it's just something, long and short, that we would have to, look at your application and what you have on your credit report to see if it would be a good option for you.
Yeah, for sure. Guys, we're going to start to wrap up here, I think, in a couple minutes. If you have questions, make sure you're putting them in the chat now. We'd
Mm-hmm.
love to answer any and all questions you have. But we do have to end. I have to respect Erica's time. She does
Oh.
have family that she's got to get to. And my wife, she might be watching tonight. I don't know if she is or isn't, but I can guarantee she wants me to get home as well from it all. So we're going to wrap up here in a little bit. So if you have some questions, put them in.
Mm-hmm.
But, Erica, I think you blew my mind a little bit when you told me earlier that rates are going to go down. And when you said that the other week, I didn't quite believe it.
Yeah.
Then I see CNBC. I'm able to
Mm-hmm.
breathe a little bit easier now. I can breathe a little bit. And I'm remembering I'm marrying the house. I'm dating the rate.
Mm-hmm.
Otherwise sage advice as well. Guys, the market here in Myrtle Beach, it's continuing to do well. Things in the Myrtle Beach area are continuing to explode. We are growing like you cannot imagine. Developments all over the place, new commercial things coming to the area left and right. And ultimately, the other thing that you guys need to remember is this stuff here in Myrtle Beach. Some things are never changing. Yes, we have a lot of things that are changing and growing, but there's some things that are never going to change. And oops, my fingers off the screen. What got to use this hand? There we go. That one's in the screen. Number one, We're going to continue to have very low property taxes. I think we're
Mhm.
number 6th in the country on
Okay.
taxes for your property. Now, yes, you're paying taxes on your vehicle, and yes, you got to do all that, and it's a little more. But even when
Mhm.
you put your property taxes and your home taxes together and your vehicle taxes, let me say that again. When you put together your property taxes and your vehicle taxes, you're still going to make out better than when you're paying $8,000 to $10,000 in New Jersey right now, 30,000 in New York.
Wow.
Yeah. I talked to some people from New Jersey,
Mhm.
and the way that I always pose the question is this: what are you paying per month for your
Mm.
taxes? Instead of what are you paying annually, what are you paying per month? And then I say to them, well, yeah, that's what you're going to pay a year here. They're like, okay, great. The other thing that you have to remember is we're going to continue to have amazing weather here.
Yes.
No matter what, we're still going to have it. Erica, this past year, I think we had my youngest is now 8, and I know you have 2 that are around that same age.
Mhm.
Miriam experienced snow for the second time in her life this year. That was her
Yeah.
second time doing it. Say what?
I said that was a little bit. We got off school and all that good stuff to see like a couple flakes, right?
Well, no, the one that was even better, it was the next week. It was on a Saturday. It
Mhm.
snowed Friday night into Saturday. Miriam came running into our room. Daddy, Daddy, it snowed, it snowed, it snowed. We jumped out of bed. We put on the 17 layers of clothing because, we don't have winter jackets down here.
Right.
We went outside and the neighbors were out there, and we had a snowball fight with the neighbors for about 20 minutes and basically used almost all the snow that we had.
Mhm.
Went back inside, changed out of the wet clothing, made breakfast. And as we were cleaning up from breakfast around 11 o'clock, all the snow was gone. We were
Right.
completely done. We were able to get in the car and go off and run our errands for the day like nothing had happened at all. I
Mhm.
think that is probably the absolute best kind of snowstorm that you could ever have in your life because it's there. You saw it. We played.
Mhm.
We're gone. It's back to life.
Check mark. Right.
Yep, exactly. The other thing and the third thing that Myrtle Beach has that will never change is we have 60 plus miles of beach and
That's not
coastline. And for
Mhm.
people like Erica who like to put their feet in the sand, that beach is going to be there always, and they will
Mhm.
be able to enjoy it. I enjoy going and seeing it and being there, but I want to wash my feet right afterwards. I think was it maybe I heard once baby powder. If you put baby powder on your feet before going, it rubs off easier. Maybe I need to try that next time.
I was gonna
Um,
say I
maybe that.
I don't know that, but I'll make my snow angel in the sand. How about that?
There you go. There you go. But those 3 things are not changing
Mhm.
no matter what. We're gonna those are constants that are gonna be here for Myrtle Beach from now until eternity. I don't see any of those 3 changing and disappearing anytime soon. So, with that being the case, people from the Northeast that are tired of paying ridiculously high property taxes, they're tired of being stuck inside for weeks on end because of 4 feet of snow. All those people say, I'm out of here. I'm done. I'm moving. Get me out of here. And, the one question I get, Erica, and you've lived here in the area for a really, how long have you lived here? Have you lived here your whole life?
Pretty much second grade. So, and my grandparents, they moved here from Michigan when they were in their early 20s. So my family has been here for a long, long time and enjoyed watching it grow as well.
Yeah, for sure. And, what's interesting is we've not really had the big concern that I always get from people from the Northeast is hurricanes here and tropical
Right.
storms. And, you know, knock on wood, we've had it very quiet the last few years.
Yeah.
I don't know if you follow how closely you follow Ed Piotrowski, but we
Mhm.
are still on for pizza party number 2. Ed, who is our local weatherman, decided last year, he made the statement, he said, if we do not have any named tropical storms affect our area and disrupt our area, he was going to throw the world's largest pizza party. And he did for a couple thousand people at the Myrtle Beach Pelican Stadium. So this year, as we are in hurricane season right now, he puts up his posts on a regular basis, and he's ended every single one with just the emoji of pizza slices because pizza party is still on.
I love that.
So, all right, let's see. We got some questions that came in here. Let's see here. Let's get up here, get to the right spot. There we go. Graham says, great info, you too. Thanks, Graham. Hope you're doing well, buddy. Ram wants to say thanks for the time and professionalism, Jeremy and Erica. Hope to cross paths with you soon. If you need help moving here, listen, we'd love to help you. You can shoot me an email to info@jeremyblanton.com, and I can get you in touch with Erica, or you can go to ericadavisteam.com. That'll take you right to her website where you guys can get all her contact info, fill out an application, do it all right there. And I'm being honest, I just did it. It takes like 15 minutes to do the application. It is super easy and simple to do. Ram then goes on to say, yep, I believe it. I can currently paying about $4,000 a year for a 1,500 square foot 2-bedroom condo in suburban Chicago.
Wow. That's over a half. Definitely you could afford over $500,000 home here for that price.
Very basic, livable 2,500 square foot home in this area. Finding a property for less than that 11 to 12 is an anomaly.
Crazy.
Ram, it's time to move, buddy. Time to move south, because you could easily get a house, a brand new construction home in some of the neighborhoods here in like Carolina Forest. I think of the Parks comes to mind right away at D.R. Horton community, where you could get what they call a Tillman model home. It's a 5-bedroom, 3-bath house, 3.5 bath house. Let me say it properly, with over 3,000 square feet, and you're probably right around like the 470 mark for a purchase price on that house. And you're going to make payments less than what you're paying at that 4,000 right now. I guarantee it. Rocco says, as always, love the information. So informative and fun. Hope to buy in North Myrtle Beach soon. Rocco, when you're ready to buy, shoot me an email, info@jeremyblanton.com. Like I said, when you're ready to get the mortgage in place, go to ericadavisteam.com, and you can get that taken care of right there as well. GTI wants Erica's contact info. Thanks. Erica, I'm going to give you a minute to give them the full info.
Sure.
And while you're doing that, I'm going to put a link to your website in the comments, since I know you're on your phone today.
That's what I was going to say. Thank you for typing it in. I was so nervous that I wouldn't be able to jump back on. But yes, it's very simple. It's ericadavisteam.com. My email address is simple as well. It's edavis@guildmortgage.net. And the easiest contact number for me is 843-839-9001. It rings to me, to my teammates. So somebody is always available, and they're available 7 days a week. And you can also text that line. So we are here to help, because I know it's hard. You know, most of us work during the work week, and we're busy until at least 5 o'clock. So I know weekends might be better, or after hours, and we're here to help.
Good stuff. Good stuff. So I was reading the comment that came in here and trying to think how I want to answer this one. But Randy wants to know, if my home I live in now is paid off, can I buy another property and claim it as my primary residence to get the best rate? I want to keep both.
Yep.
I'll let you talk about the mortgage side of it first.
Yeah, absolutely. You can. Again, it all has to make sense. So, Randy, it's really, what is your goal? If you're going to be living in Myrtle Beach, and this truly will be your primary residence, this is your primary. You would go ahead. We would get everything, as far as the application and the purpose, it would be your primary residence. And then we would just list that your current home, we would hit you with those expenses, which would only be your taxes and insurance. So I'm sure that wouldn't be a problem. And it would just be listed as an investment property. You know, it wouldn't be contingent upon you selling. So that is definitely achievable.
Yep. Now, from the other side of it, the tax side, let's talk about that a
Mhm.
second. In order for it to be considered your primary residence here, you're going to need to move everything to the Myrtle Beach address. Now, depending on what you have and what state you live in, turning your home in whatever state that may be, New York, New Jersey, Pennsylvania, wherever, into a second home may make
Yeah.
your taxes go up so much that it would not be worth the difference in the rates being a little bit higher, maybe. That's one of those things we have to kind of take it case by case and look at it.
Mhm.
But in order to do it, you have to make Myrtle Beach your primary residence. If you have a spouse who's on the house up there, and going to be down here, both you, even if your spouse isn't on the house down here, you both have to get everything registered to Myrtle Beach as your primary residence. One spouse cannot take one house in Ohio and make it primary residence, and the other spouse make Myrtle Beach their primary residence. You used to be able to kind of game the system back many, many years ago, but that has gone away, and they're pretty strict on that and don't really have much room for finagling it in the long run. So, you know, definitely something we have to we can look at on a case by case and see. You might be better buying this one here as a second home. You might be better buying it as a primary residence. Would you agree, Erica?
I would, yes. I mean, that's a good point because interest rates obviously are a lot lower on your primary, but our property taxes, that's a big swing.
Yep. Ooh, here's another good question asked, and GTI just went through this because my credit is frozen too.
Yes.
We've frozen our credit. Do you run our credit through a specific credit company so we can unfreeze
Mhm.
with just that company? They actually run it through all three of the major sources. And how does it work, Erica? You take the average of the two best. Is that what it is?
So there, yes, we pull from all three credit bureaus, and then the number that we use is your middle credit score,
The middle
and that
score.
can vary quite, there can be a big gap there. So we've experienced that, me and Jeremy. So yes, and
Yes.
you don't have to unfreeze it until literally we're getting ready to pull credit. I'll let you know, hey, we're going to be pulling within 24 hours. You give me the thumbs up, I'll pull it, give you the thumbs back up, and then you can refreeze it. It doesn't take long at all.
Yeah, and actually, what they do, GTI, with some of these, I believe it was TransUnion. Literally, I have an account there with them where I froze it.
Mhm.
I logged into the account. I said unfreeze my credit from this
Yeah.
date to this date, and I was good to go. I think it was Experian. I
Mhm.
had to call and go through it and verify it. And once I did, they said, "How long would you like it unfroze?" And they did that. We were good to go. But yes, so what Erica was saying, and while I was laughing, is the credit score numbers can be super, super different. We'll just put it this way: the difference in numbers from the lower of the three and the middle for me was close to 100 points.
Yes. I didn't want to say that. I have to let you say that because it's personal information. But yes, it can, there can be a wide gap, that's for sure.
Yeah, and when she told me my first, because one of them came through even with this credit freeze, and that was the lowest one. And she said, "Well,
Mhm.
Jeremy, this came in, so we need to get the other ones unfroze to look at it and all, because based on this is what's going to happen." And I'm like, "There's no way that number can be right. That something's wrong here." And then when we unfroze it and she pulled it on, she said, "Don't worry, we're good. Your number's up here now." It's like, oh, okay, which
Yeah,
I panicked for a few. Yeah.
I did too. We got to get you the lowest rate possible. And, clearly on a conventional loan, your credit score comes into play with that.
Yeah, for sure. For sure. Well, guys, we're going to wrap up, I think, this evening. If you have a final question, put them in now into the chat box. Erica, is there anything else you'd love to share with the people tonight? I'm giving you the floor.
Oh, thank you. Well, I think you covered so much wonderful points. I mean, Myrtle Beach, guys, I've lived here so long and it'll always be home. But even with the increasing values and interest rates rising and all that, I mean, you can't find another beach, another city around that you can get properties still in the mid threes and be that close to the beach. So the value is there. It's worth going ahead and purchasing now. Again, you can always refinance down the road. So trust your gut. If this is something that you want to, in the future for it to be a home, or you want to invest here, do it now. We can always refinance. And certainly if you're thinking about it, even within the next, I'd say 3 to 6 months, go ahead, do your due diligence now, get approved. Let's put out a game plan that is, needed just for you to meet your individual needs. And we can do that with a loan consultation. That way, by the time you meet with Jeremy, you feel 100% secure about everything. You know, a good solid range to meet your financial goals, your monthly payment, all that good stuff. So it's never, ever too early to explore those options.
For sure. And just to give you an idea, and I'll share this listing because I helped him buy it and he had a corporate relocation thing. So I actually was speaking to
Mhm.
him. I don't know if Zach's on tonight, but Zach, I'm going to call you later because I jumped off because like, hey, I got to go. I got to do this stream.
Yeah.
But they're selling their house right now and a corporate relocation company took it and put it with their company to do it, which, it happens. But
Mhm.
this house, just to give everyone an idea, it's a 3-bedroom, 2-bath house with 12-foot ceilings in the living area, all open floor plan in the farm, my development I live in
Mhm.
Carolina Forest, 1,750 heated square feet, fenced in backyard for $335,000. It's a great little home for that price.
Mhm.
And what's nice about where we live in my development, I'm 12 to 15 minutes from my door to the beach. I've shared in the past, my wife every morning used to go before she started working, which I think since last time we did one of these, my wife now has a job, folks. Not because she needed one, the church needed her. So she took a job doing that. But she used to, in the morning, get up, take the kids to the bus stop. After the kids go to
Mhm.
the bus stop, come home, grab her keys or purse, wave at me as she ran out the door, and we go down to the beach and walk for a mile or two on the beach in the morning and
Yeah.
just have her refresh time to do that.
Mhm.
And we're 12 minutes away. Now, some people may say, "Oh my gosh, that's so far away." For those of you that are saying that, let me just ask this question now. How close to the beach do you live currently? Exactly. You're probably 10, 12 hours. So,
Mhm.
there's a great opportunities and options that are out there for sure. If anybody else, let's see if we have any final questions that came in here. I don't see anything. Erica, I want to say thank you for jumping in today with us and talking with me, sharing your knowledge on mortgages, on interest rates, on where you think things are going to go, the future of them. I'm looking forward to refinancing next year already.
Hey, we'll get you there. That's the beauty of servicing loans, right? I am alerted once it makes sense to refinance. So
There you
you
go.
will be my first call.
Awesome. I'll be looking for my call. I'm going to be looking
Yes.
for it already. But guys, thank you for joining us tonight. As I mentioned before, if you have any questions about making the move to Myrtle Beach, feel free to reach out to us. My information is going to be in the description down below. Erica, you can find her at ericadavisteam.com. That is the easiest way to get all her contact info right there, as well as
Mhm.
apply right there at that spot. Now, Erica, before we go, one of the things I'm going to try to do every time is this, and I didn't prep you for it, but
Okay.
if we could pick one place to go eat tonight, where are we going for dinner?
Oh, that's an easy one. It's my go-to, Fire and Smoke. It's on 79th Avenue. It is a local restaurant, hands down for me. I mean, it's my fave. I go there once or twice a week. Fresh ingredients, or fresh seafood and meat. You can't beat it. And I do like tequila, guys. They have the absolute best drink there. It's called the Smoke Show. So if you go, you'll have to tell them, Erica said, get the Smoke Show. It is absolutely divine.
Okay, I'm gonna have to take your advice on this. I have never been there.
It's very
I've
good.
had people who have told me to go. Last time we did one of these, you mentioned to me go to Hook and Barrel. And I
Yes.
did take my wife and go there. I have to admit, her scallop dish was 10 times better than my steak dish.
Yeah, it's seafood. Come on.
It was really, really good. And
Mhm.
I'm not all the other parts that were in it with grits or corn or whatever it was. That's not me so much. But it was pretty darn good. So
Yeah.
Fire and Smoke is gonna have to go to the top of the list of places to try soon. So
The steak is amazing. You got to ask for Lori too. She's
ask for Lori.
Lori.
All right, I'm gonna need you to give me notes on all this. You're gonna have to
I will.
email this all to me because
I will.
I won't remember all this. I got too many things going on these days. But everyone, thanks for joining in tonight.
Thank you.
We're gonna be back again probably in 2 weeks. I will post it ahead of time. Erica, thanks for joining us. You are always welcome to come back and join us anytime you want to here on the show. And guys, have an amazing week, and I will catch you all later. See ya.
Thanks,
Bye-bye.
Jeremy. Bye, guys.